Okay, hello everyone. Welcome to FOMC Day. Today is Wednesday, October 28th. Michael Boutros here with you guys. Great to be here this morning ahead of the FOMC interest rate decision at 2 p.m. today. Lots of things to go over. You might have seen a jam-packed update last night. The dollar crosses are essentially all on the table for today. There are focus pairs that we're looking at specifically on the com block, CAD, Kiwi, Aussie, all looking very interesting here. Dollar yen of certain will be something that we're interested in. We talked about that yesterday here in the webinar. We actually put together some levels. Seems pretty appealing. We'll go over that setup again. As always, throughout the course of the session, questions, specific pairs, or trade setups you guys want to review, feel free to post them on the message board. All right. So let's jump right in. Quick look at what the relative performance of the greenback looks like so far on the start of the session. You do have sort of a split performance. Losses in the Kiwi and the Aussie propping up the dollar, although Swissy, CAD, and Euro remain on a firmer footing ahead of the release. A lot of the pairs, guys, as you head into deeper Asia trade last night, just went complete range. So you didn't see too much volatility on some of the crosses here, but we'll take a look. There are some interesting opportunities, like I said, on dollar CAD. Sterling is also tempting a near-term break, so we'll look at that. But first things first, the dollar index. So it's at a messy juncture here. I didn't put this on yesterday's charts just because of the cleanliness of the setup just isn't there. We're essentially looking at 12,051 as resistance, a basic 786. The confluence resistance that we were looking at yesterday did give us a pullback, but here we are once again testing that. So we'll want to see if we were able to close above this region. Remember, we looked at this yesterday. We still haven't been able to do that. If this pulls back ahead of today's release or after today's release, it'll look like it never broke. So we definitely need to be mindful of the dollar index as far as the upside is concerned. If you take a look at the 30-minute, similar story. Okay, we went for a test essentially of the opening range for the week. Here's where we were when we published that update last night. Didn't make it through, but not much of a pullback either. We're sort of just sitting right there. So dollar index doesn't really have too much of a conviction play. You're testing a break of resistance. That's all it is. The risk still remains to the downside on a more dovish Fed. Remember, a couple of things, guys. Looking at the going into this policy decision, what is the Fed looking at? We got a weaker, dismal NFP report early in the month. In fact, we got a downward revision to last month's print as well. Retail sales were a disappointment. CPI was mixed. Month on month did fall short of expectations, but year on year, and more importantly, the core did uptick. So you're getting sort of these mixed signals from provided to the Fed by these economic indicators that will make this a little bit tricky. The key will be the policy statement and whether the policy statement shows a little bit more of an upbeat assessment at which the Fed is prepped and ready for a possible rate hike next month, or if they continue to cite concerns over China. I doubt you'll hear anything about Europe, but specifically China, global growth, and if we hear any concerns about deflation or the lack of, let's say, inflation, that would be something that could spark a little bit more of a pronounced pullback in the dollar as those interest rate expectations get kicked out. Mark says, I would look for worries about overseas weakening and global events restrain economic acts. If you're looking to quote the language for me, Mark, yes, exactly. We're looking for that. And if we take a quick look, let me just bring up the terminal here real quick. If we take a quick look at what the Fed is looking at, or what the expectations are for today, median forecasts still have us at 25 basis points. That hasn't changed. All right, so median estimates still look for us to hold at 25 basis points. That's 90% of the participants and economists that are involved all look for a hold today. So the question is, does that interest rate get kicked out for December? And the December 16th print, you can see a little bit more of a distribution where the median is actually taking us up into, or the average estimate is taking us up into 0.41%. Median is at 50%. So there is an expectation for a possible 25 basis point hike in December. And that's what we're trading on. If this expectation skews, or if you see December calls start to come off, that would be bearish for the dollar. If they see him come out with a lot more Force, hey, things are on pace. We were about to do it this month, but you know, there's a wait and see approach still until next month to see if everything simmers down over in China. We just got a fresh batch of easing there. Don't forget that's going to relieve some pressure from the Fed. Um, then look for this median to move over to possibly show a little bit more of a stronger consensus for a 25 basis point hike in December. Okay, we'll go over this again tomorrow and see if there's any shifts to the outlook here, but certainly near term, that's what we'll be looking for. So as it stands, we're not here to dictate policy, we're here to trade it. What does that mean? Again, we'll be looking for that resistance. The major key break that I would be looking for to validate sort of continuation higher here would be a break above 12,071. 12,071, just as a quick reminder, is the reversal day close subsequent to the highs that we made for the year in April. It's also the stretch highs that you made here in August and pretty damn close to the open of October trade. The actual open of October trade was 12,072. So you can see a major key level there. If that breaks, you know, we're looking for the highs again, 12,104, and the high day close comes in at 12,012. Our preferred scenario, excuse me, is that we see a hold in price at this resistance and get a little bit more of a whip to the downside. If the data is more benign, or if we see that the interest rate decision doesn't really have any details in it, markets are kind of just sitting on their hands, and you see a spike up in the dollar into 12,071, that might be a perfect opportunity to fade it. Okay, and it's a moot point, guys, to talk about all these possibilities of if it spikes here, short it, if it dips here, buy it. We really need to see what the data comes out or how the statement looks when it comes out and the market reaction, but we'll try to keep you updated on SB Squawk. So that's the dollar index testing resistance. For those of you who can't trade this stateside, a good indicator just to be able to ascertain base dollar movement. So here's what we're looking at from yesterday's setup. First things first, here's dollar yen on the daily. So dollar yen, very interesting setup. We went over here yesterday in the webinar, guys. I'm not really a fan of dollar yen, as you know. Lori Bauman says, Michael, am I supposed to be getting tweets from SB Squawk? Guys, if you're newer to the service, you can subscribe to the SB Squawk feed so you don't only have to read it here on the page, so that you can see it in your own Twitter feed. Also, anything that has a hashtag trade on it, you can set a reminder that'll give you a message anytime that comes up. So if there's an extra or a new trade setup, or if there's an adjustment, as we did here to the Kiwi swing trade, you'll get alerted. The way you can do that, Lori, is if you just go to the home page, right here it says SB Squawk sign up form. Just go ahead and complete that form, and then make sure you go to our SB Squawk Twitter page and click follow. She says, yes, I did that last week, and I got a message that I was waiting to be accepted. Then you should be in there, Lori. Yeah, Lori, you're in there. So if you just open your Twitter handle, you'll see those come through. You're all set to go, Lori. As far as the SMS tweets, here's how to set up the alert. Just going to send that link right over for you, Lori. All right? Sorry if you get sidetracked here, guys, but I wanted to help out Lori. So here we go. As far as the dollar yen's concerned, so the rally rent through the upper median line parallel. It was a confluence with 200-day moving average. We spent less than a day there before turning back around. On a near-term prospect, there is some resistance here. I'll show you on the intraday charts, which caught the highs, but the pullback now finding support at the former trendline support extending off the lows from August here. Not that stretch low, but the August 25th low. Tagged again right here in September 4th, near tag on the 18th and the 24th, and obviously the break, recovery, again support. It's clear on the near-term picture, but I just wanted to point out a couple of things. You're coming off of a turn ahead of 60, and if we break below 50, we move back below the monthly open, which happens to coincide with the 2015 open, okay? Then that would shift the focus more firmly to the downside in dollar yen. Here's what it looks like on the 30-minute, and here's what we look like last night. So you didn't get much play on this one, an overnight trade. The focus was to get on a short as close as you can to 120.58, 120.52, this region right here. Didn't get a stretch quite that high. Subsequent to the report, you're looking for either a break below 120.20 or a break above 120.58 to get this thing moving. The focus is to the downside. Here's the median line structure I'm working with. The focus is to the downside. So on a FOMC release, a spike into the upper median line parallel, maybe like 120.98, the 120.21 handle would be an opportunity. I would start looking for some short triggers. If we break here, no longer interested. Okay, so that's essentially 121. If we clear 121, not really looking to play this anymore. You're likely to see this thing rally right up into 2180, huge region. It's a 618 retracement from the decline off the August highs. It's also the December swing high from last year. Add to that, you also have the 100-day moving average coinciding dead on that region. So the levels are clear. Bearish sub 121, topside break, you're looking for 2180. On the short side, if we do get some nice triggers or if we do break sub 120.17, you're looking for the 2015 open, like I said, on 119.88, and then a 1618 extension would take it down to 119.60. Keep in mind the short, or let me take that back, the support that we rebounded off last night was pretty big. Okay, you're looking at a basic trendline support off the lows. This is from the 16th, tagged once again here on the 22nd. There's a third tag that we made yesterday. It also is a basic 38.2 retracement of that advance and completes a basic 100% extension or two equal legs down off the highs. If this is just a simple correction, then this should hold. Our view is that this is just the onset, likely to see a little bit more of a draw to the downside. That being said, your levels are pretty clear. 120.58 for the rally into 121. A downside break below 120.17. You're looking for the 2015 open. Questions on dollar yen? Not typically a pair. You guys know I'm typically never a fan of trading this pair. It's nothing from a trading standpoint, just a personal thing. Early in my career, had a really bad time. Dollar yen has been the source of a lot of my joy and a lot of my misery. So I tend not to get too involved in it. Also keep in mind, it is a very tight ATR. And while it's only showing 19 pips now as a quarter of a daily ATR, expect that to really surge, okay? Because dollar yen is notorious for reacting to US data. And certainly from the Japanese standpoint, guys, you still have tons of event risk this week. Last night you got retail trade and sales figures, but tonight you get industrial production. Tomorrow, the jobless rate, CPI figures, all culminating into Thursday, Friday's BOJ interest rate decision. So it's going to be a big week for the dollar yen, even after today. Don't forget, as it pertains to the dollar, we still have third quarter GDP, the advanced read, also on tap for tomorrow. So, boy, as far as this pair is concerned, these levels look really good. The market has given us some nice reaction off them. We'll continue to track this one nicely. Christopher saying, good morning, Mike. Are you long 120.17 if dollar yen reaches it again? I wouldn't do that on the release, Chris. He says, okay, you answered it. Thanks. Yeah, I didn't read that part. Chris, I don't think I would do that on the release. You know what I mean? So if the release comes and dollar yen tanks into 120.18, I'm not going to fight that because you're likely to see a break there really just drop into 119.60, to be honest with you. I'd be more interested if we rally into 20.58 and that fails to take the pullback. Or if this breaks through, you get a pullback, I'd actually look to play the stretch into 121. It really depends on what the initial reaction is. But a lot of times during this type of event risk, the initial reaction is not the market, is what the market's going to follow through with. Because it's not an NFP where it's stronger or weaker move, right? It's got to go through the statement, got to see what the demeanor is, what the Fed is saying, and sort of sometimes as until the market actually digests what the statement is saying, you'll get just a lot of whipsaw action. So look for a break of the key range, 120.58, 120.80. 18. Chris, does that help? Does that make sense? Look, I mean, I like the short side, Chris. Specifically as we head into the BOJ, I don't think necessarily that they're going to be doing more easing. If they do, you'll likely see this thing rocket. But if they don't, there's a lot of expectations. The BOJ is notorious for the Halloween trickster, right? The Halloween easing that we saw last year, and you saw massive amounts of volatility there. So we'll want to play this post FOMC. Chris says it does, but I was just looking long dollar yen because I don't think euro dollar is done to the downside. So I was looking for potential entries. Yeah, I wouldn't want to play them all like that, Chris. I know the propensity, and it is a dollar event day, so certainly on a dollar rally, you should see the pairs all more or less give us a little bit more of a simultaneous move. But you could see dollar yen move to the downside and euro dollar kind of hold its ground. You know what I mean? It's not necessary that you'll necessarily see the euro rally higher. That being said, we'll take a look at euro in a moment, Chris. Remind me if I don't get it. Let me write it down here. We'll definitely take a look at euro. It's not really something that's been on my radar as of late, but we'll take a look. All right. So that's dollar yen. If there are no other questions on dollar yen, we will move right along. Next one on tap is the British pound. A little bit more of a play on this one last night, and here's the setup. So we were coming into confluence support. It was basically the 53 handle. You had that long-term median line that dates back a couple of years. And on the intraday charts, we were holding within the confines of this nicely formed descending median line formation. Still pretty clean, although lackluster in the amount of momentum that we have on it. Here's what British pound looks like now. Well, I guess let's start with daily. So a little bit of an adjustment to our pitchfork that we presented the day before. We were going off the high from June, gave us a little bit more of a steeper pitch, but if you take it for the high from May, it deadens the slope a little bit, and the sliding parallels actually tend to look like they're matching up a little bit nicer. At this point, it keeps us in the confines of this broader formation off the highs. Okay, and you know where the resistance level is. That's 154.60, 154.70. Support, we're still sitting on that same slope line that we've been talking about. And today's close is going to be absolutely paramount here. 30-minute looks like this. Okay, so the sort of focus on this last night excuse me, was whether or not we were going to actually see a downside push through that 53.08 level. It's the 50% retracement of the rally. You do have a basic trendline support coming off the lows here, which is also in view. Looks like we've broken through. You're looking for a dip towards 52.60 at this point. The initial or the idea that I presented in yesterday's scalp or intraday update was if we had a pop here, I would love to get short at a higher rate. I would have loved to try to get a short position off 53.70. Near term, that's going to remain our bearish invalidation level. Okay, it's going to necessitate a break through the median line, and it's essentially looking for a rally into that basic 38.2 retracement off the high. Below that, the risk remains to the downside, guys. So subsequent targets on the pound would be, like I said, 52.60. There is this confluence here, the median line, which happens later tonight, right into the open of Asia. That's somewhere around 52.34, 52.35 right here. But more importantly, you're looking at that low, swing low from October 13th, and that matches dead on with the 764 retracement, 152. So long story short, bearish sub 53.68, downside support targets at 52.60. Watch that 52.40, 52.35 level, and then 152 would complete a 764 retracement and tag those October 13th lows. It's likely to happen pretty quick, guys. It's likely to happen pretty quick if it breaks to the downside, just because of where we are on the daily chart. Every time we've sailed through this line, if you look back in price action, again, never take my word for it, guys. Go back and look. Every time we've approached this trend line, you've either seen a massive major key reversal, okay, major reversal, or you've seen a massive run through, massive run through, massive run through, right? Only a couple times did you dilly-dally around it. But the long and short of it is every time we've crossed that threshold intraday and really pushed through, it's been more of a prominent push. Okay, so watch that downside there for the British pound. Any questions on sterling? Still looking for a rallied sell here while within this formation. All right, that's dollar yen and sterling dollar. Next up on tap is Kiwi, and I wanted to give you guys a little bit of an update on that. If you missed the swing trades, they're still on the short side of the position. I just wanted to give you some near-term levels that we're looking at. Look, if dollar yen, or excuse me, Kiwi dollar pushes through this support on a closed basis, it certainly does risk a much more substantiated drop for the Kiwi dollar. Here's what it looks like on the daily. We're looking like we're trying to make a push through this now. Here's the pitchfork that we're working with on the 30-minute chart. And it looks pretty good. I would be cautious about getting too aggressive on the short side because I do think that we've made a turn here. Momentum, we've talked about this trade earlier throughout the month. Both price action and the momentum profile has certainly changed from its behavior. You got that massive divergence into the lows, first 60 break that you've seen since 2014, specifically in July. And while you are seeing some pullback here, the broader story remains constructive above the actual median line off the low. So that could take you still as low as like 66. All right. So just to put things in perspective from the daily chart, on the 30-minute, here's what we look like. So yesterday we were coming into this major key support near term, 67.33, 67.40. You're basically looking at a 764 retracement, excuse me, a 786 retracement from the advance off last week's low, a 236 retracement from the advance off of the September swing low that you made late in the month. And then you also have the opening range low for the week, okay, which came in at 63.37. So if this median line, like we said on the daily chart, is in play, you'd look to stay bearish sub 67.80. If you noticed, we did just choke up the stop on that Kiwi trade that we're on the swing side of things. That stop has been tightened to 68.20, which is just above this region. And this, as we noted in last night's report, is the bearish invalidation level. Why? Because objectively, we're making a break of the weekly opening range here. So objectively, you want to look lower below 67.38, period. If it breaks higher, look for a rally into the upper median line parallel. I'll be looking for short triggers here, neutral here. And if we break higher, then you're looking for continuation of the uptrend. Okay, but just keep in mind a couple of things. This would be not only a break of the median line parallel, but would also necessitate a break of the objective weekly opening range. And this is where the weekly opening range shines, guys, is invalidating the near-term trend and also giving us validation for what the immediate trend looks like. So I'm personally looking lower sub 67.85. Even if you get a spike or a rally on some dollar weakness, you know, look for that 67.80 level near term, nice confluence region there to give us some resistance and a possible re-entry on the short side. Kiwi is in focus today. Not only do you have the Fed, but then you have the RBNZ. Wheeler is known for slamming the Kiwi. He wants a lower Kiwi. It's their own form of free easing, right? And not only that, the following morning get US GDP numbers. So this pair will certainly be in focus. Expect some volatility favoring the downside sub 67.80, 68.20 is needed to invalidate the long side. Or excuse me, invalidate the short buys. Questions on Kiwi dollar. Downside targets, you're still looking for a soft target at 67.08. But the more important level is this confluence region here, 66.85, with the median line off the highs. Okay, we have seen a little bit of a smidgen there as we ran through that median line. So if we extend a parallel, if we extend a parallel off of that, just to have that there, if we get a really crazy stretch, 66, 63, just lower, another 20 pips. Remember, you're only looking at 24 pips here as a quarter of daily ATR. Is that 67.08 target on 30-minute, Lori says? What do you mean by that? 67.08 on the 30-minute? So Lori, we do all the analysis on the 30-minute chart. Lori's asking, are you trading on the 30 or the 5? So all the analysis that we do is on a 30-minute chart. This is where you're mapping out the levels, right? I don't want to do analysis on a 5-minute chart and try to draw extensions, trend lines, and whatnot, because you're so micro in price action, you're gonna make a mess of things. Once we look to actually execute the trade, this is where the 5-minute chart comes in. So here's the Kiwi on a 5-minute chart. Here's your U.S. opening range so far. U.S. opening range high, 67.25. U.S. opening range low, 67.15, 67.16. So heading into 9:30, 10 o'clock, you look to see where this range ends up, and you look for a near-term break of that range. If we break to the downside, we'll be looking for a target at 67.08, but I'm not going to take a short here for just 8 pips against the highs, right? So maybe into U.S. trade, we head back up into the London high. We check that region. You get a short trigger up there. That would be a much more convenient stop against the highs for London, trying to make a move into 67.08. If we just open the session and it just drops, there's no trade, right? Guys, knowing the direction's only 50% of the game. The other 50% is timing. So I might be right here. We might all be right. This thing might just drop into 66.83. If we don't get a proper entry, it's not a trade that we can take advantage of. Okay. Okay, so I need to get up to speed on ACD. So I'm not huge on Elliott wave counts and this as it stands. Neither is Jamie at this point in his career, I guess. Listen, Elliott is a very helpful tool when you're able to readily identify the wave structure and it's just popping out. The problem you run into getting too micro with Elliott is that you spend so much time trying to label every move, you end up making a huge mess of things. Oh, you're talking about Fisher's ACD, right? Yeah, I don't label them like that, Lori, but yes, I'm with you 100%. I'm sorry, I was misunderstanding what you were saying. She's talking about Mark Fisher's book on the logical trader, which highlights the opening range strategy. So yeah, that's exactly what I'm looking for as we open up each trade session. Just another tool, Lori, right? Not the only tool we can use. Certainly if the trade is at resistance and I see a support trigger, I don't care. I'm not going to necessarily wait for the opening range, but it adds conviction. Maybe on an opening range break alongside those factors, I will up my leverage. Instead of X, I'll trade 2X. You know what I mean? So it should be used as a tool, not in and of itself justification for a trade. Got it, she says, exclamation. Awesome, Lori. Yeah, it was a learning curve, so don't worry. Keep asking all the questions that you guys have. You're in the right place. So a very appealing trade setup here ahead of some major event risk, namely the Fed and the RBNZ later today. I do want to clean up this chart just a little bit. I had this trend line as a focus here because we did show a nice pivot off it. At this point, I don't really want to stress that. If we do rally through this region, I would expect to see that upper median line parallel tested. All right, so that is Kiwi dollar, and we are looking decent on time. Here's dollar CAD up next. And that was highlighted, or I guess let's go over Aussie dollar first. Here's the Oz. So some disappointing data out of Australia last night. Slowing CPI is certainly going to be a concern there as we have these deflationary concerns pretty much around the globe now. It's getting ridiculous. Excuse me. Here's what the CPI figures look like last night from Australia. So you saw a miss on the quarter-on-quarter headline print. The year-on-year even softer, no growth there. We were expecting a pop up to 1.7. If you take the trimmed, also weaker across the board. So if we're unable to stoke inflation, that brings up the possibility or the probability of another interest rate cut from Australia. We've already heard them say that there is room for further cuts. They kind of omitted that on the last cut, that comment that there was more cuts down the pipeline. So people started to factor out further cuts from the RBA. If we continue to see lackluster inflation growth or wage growth, and specifically if we start seeing GDP start to taper off even more, you're likely to see those easing rhetoric start to surmount some more. Here's what Aussie looks like on the daily. So we broke below that 72 region. 71.80 was a major region of support. We highlighted that earlier in the week. Now coming into confluence support right at the 71 handle. The low last night was 71.10. The actual 618 sits at 71.06, so 4 pips shy. Watch today's close. Okay, if this trigger break does materialize, which it looks like it will, on the close, that would be a bearish development and would keep the focus weighted to the downside while below the 72 handle. Confluence support here could give us a pop. With the same respect, on a FOMC break, you're basically looking right down into 70. 100 pip drop. Here's what it looks like on the 30-minute. So post that poor CPI print, we were coming off of a rebound of that 71.80 major key support we just talked about. In fact, the reason, that level was so big as well was sort of similar to what we were looking at in dollar yen. In that completed an exact 100% extension off the high. So 2 equal legs down, takes into 71.78. You saw a slight rebound, or a nice rebound off that rather, last week. And here we are right ahead of that read. We were sitting right there. We saw a rebound right back into the opening range low for the week. So on this trade, guys, it's even cleaner. Lori talking about the opening range strategy from a weekly standpoint doesn't get much cleaner than this. Okay, Sunday open, you set a high, you test the high, you test the high, you test the high. You went to the low, you broke it. You're not sure that this is the opening range low because you never got a test. Just sailed right through. But the reversal, come back and test as resistance, is the verification. Obviously, the break below 71.80, this was on the news release. Downside targets that we noted the previous day, 71.58, 71.33, and there's that 71.06 we just missed by 4 pips. All right, so the trade still looks bearish. At this point, you want to reduce your bearish invalidation level. We're going to bring that down to that 71.80 level that we just discussed. A downside break from here, you're looking for a run to the 1618 extension. That takes you to 70.65. 70.30 would be a 786. And then the 70 handle is right there. And again, I just highlight these where they are in time, guys, to give you reference. Obviously, if we're breaking through, just because the circle here doesn't mean I'm not targeting 70.65. When you're going through the levels, especially on an intraday basis, just take the next target down. They're all mapped out for you. We spend a lot of time, getting these charts up and really dressing them as cleanly as we can. So, this is just a time reference for you. So if you see a rally, for example, today, we hold 71.80, that might be a downside target you look to achieve into the close of the week. As far as Aussie data is concerned, you're pretty much spent into the close of the month, into the close of the week. So look for the dollar to be the major driver in price action for Aussie dollar. Michael, where do I find the open/pending trades on the website? Lori, so if you go to the website and you click on long-term trades, it's going to be under the swing update. Every day you get a swing update at the end of the session. And if you scroll down here, here's active trades, watch list, and then some charts on what are the major pending trades that we have on tap. There won't always be a pending trade here, right, guys? There won't always be an active trade here. It depends on whether we have any trades open and whether we have any orders out there. Pending trades will be the orders that we're looking to get in. Active trades, obviously, are trades that are currently in play. You can always find that, by the way, guys, if you just log into the SB Trade Desk homepage, it's always going to be under recent posts. Just look for the most recent swing update, and that'll have all the pending trades in it. All right, Lori, hope that helps. Any questions on the Aussie before we move off? What's interesting is today's release for the Kiwi has me focused on Aussie Kiwi. We touched on this briefly yesterday. With the Kiwi event risk on tap today and the Fed likely to move Kiwi and Aussie, I'll be looking for this trade, guys. I do like the short side sub 170.23. If you guys recall, this was a trade setup we've been following for months and months and months. The slope is dope, my friends. The slope off the lows that we made from January of 2014 is ridiculously clean. If we mirrored that slope, it's defined every turn in price. The last time we broke through that was here. The reason we remain bearish below 70.23 is the same pivot slope is in play, crosses right into that fib intersection. A 1618 extension off the high, 50% retracement off the low, and they all coincide with that slope right between 70.11, 70.23. A measured move, if this is some sort of double, triple top, whatever you want to call it, of this rally, okay, takes you down as low as 104.40. So if you think this thing ain't got no more juice on it, keep that in mind. Just a measured basic move of that break does still have a target down at 104.41. Bearish sub 107.23. So another pair that could be of great interest if you're trying to sort of diversify away from dollar bases for today's release. I'll be watching this one as well as we head into the RBNZ later this afternoon. Any questions on that? I don't think I have an active setup for the Aussie key on the 30-minute. All right. Next up on tap, I want to take a minute and just go through the radar charts from yesterday. Lots of these are interesting too. I am very, very interested in the yen crosses. We talked about all the yen event risk that's still on tap this week. Christopher says, what does the 30-minute setup look like? Yeah, Chris, I don't really have one, man, but I mean, I guess I'll just show you this. This is just a basic median line formation off the highs from September. Well, it's actually technically it's late August. Early September, but it's continued to define price action pretty nicely, in my opinion. You haven't gotten too many reversals off it, but that broadly keeps the same region in focus, right? 70.30, 70.23, same thing. That's also now, Chris, the weekly opening range high. So it all matches really nice, right? The daily, the 30-minute, you've got a weekly opening range high at resistance on the daily chart, which is a huge Fibonacci confluence in that long-term slope. You also have the weekly opening range there and the median line for the structure of the descent off the highs. So there's a lot of conviction. If you do see that break, look for a rally towards 109.35. But our favored move here is for a hold near term on this. Again, it might be a breach type scenario if Wheeler comes out this afternoon, this evening, comes out all dovish and starts talking down the Kiwi again. You could see a test of that high at 107.26, but I'd be looking for short scalp triggers into that region. And let me just do this as a drill here and see if we have any. Possibly a sliding parallel here. I don't want to really stress it too much, but support, break, resistance, that would give us intermittent target right about here. And another move I'm going to do, I don't want to really encourage this because we do not know that this is a low, but we do see some divergence. I wouldn't even call that divergence. Let's just see what that retracement looks like. Basic 236 comes in at 107.15, same region. Yeah, this thing is prompted right here for resistance. So just keep that in mind. And look, the 50% comes in right at that 109.30 level. So I'm pretty confident with these levels here. We'll stick with what we got. I hope that offers some clarity or some clearance for you here. Like I said, a downside break. Look for that 1618 extension, 104.83, 103.25 would be a 786 retracement. Like I said, remember one other thing, the downside break of a descending channel, those can be the sternest, the steepest, sharpest parts of the move. A topside break of an ascending rally or an ascending channel formation likewise will be the sharpest, steepest part of the rally. So a break below that 104.80 level, I'd expect to see a lot of heat, especially if it breaks at this confluence region here, which is early Asia tonight. Chris, hope that helps, man. He says, very clear on Aussie Kiwi. Thanks. Mike, how do you copy your trend lines like that? Is that a PC thing only? No, Chris, just click on any trend line that you have drawn, guys, and hold down Control when you click on it, and it'll allow you to copy it. So if I draw a quick trend line and I want to copy that same exact slope, all I got to do is hold Control down on my keyboard, click on it, and drag, and it's going to go ahead and copy it for you. Unfortunately, it does not work on pitchforks. So on pitchforks, I do have to mirror the slope. So just keep that in mind. I've notified the developers about that. Actually, I've been hounding them about this. So it will be available in the next release of TS. But as of now, you can just copy trend lines. All right, so that's Aussie Key. Sorry for the segue there, but another one that's going to be of great focus. I did want to take a moment and go through the radar charts. Dollar CAD is something that we highlighted in the intraday updates earlier in the week. We were looking for the turn, never got it. I think if we're gonna get it, this is the last ditch effort and the last place that you'd look. 133, sort of the invalidation level for the entire bearish idea to begin with. But look, this is a big region of resistance, and we highlighted this on the 30-minute in that it is a simple 1618 extension off the lows. But more importantly, you had that upper median line parallel for the formation that we've been following off the highs. And this has defined price action very nicely. We didn't actually get a tag. We actually turned right ahead of it. And that support trigger that we had in view yesterday gave out with a nice trigger to the downside. This was only one of the only plays they actually had last night. Nothing else wants to budge. Markets go into the all too often well-known pre-market data lull where we kind of just move sideways. But this was one of those trades that actually offered a nice move. So a break below the lower median line parallel again at the formation off the lows, confluence to the nice break of that trigger. You had some divergence, obviously all into the highs. Downside target 103.17. And this right now, and if this breaks, which it looks like it's doing, this would mark, in my opinion, a more prominent near-term correction here for dollar CAD. Remember, here's what it looks like on the daily. Pretty big resistance here, okay? The monthly open comes in at 133.11. So after all this drama, all this massive drop from 134 into 128, we're now just pips away from being unchanged on the month. Okay, so long story short, this region here on a broader prospect is the bearish invalidation level. I'm looking lower in dollar CAD. Here's what it looks like on the 30-minute. So now you're looking at a basic near-term structure at 131.50, 131.44. Okay, a sliding parallel of that same slope that you see there in gray comes in right into that region as well in U.S. trade early today. Bearish invalidation held steady at 132.83. That doesn't change. We'll leave that right up there. Actually, you guys hold on one sec. I'm just going to do some on the fly here. Let's see what this looks like. It's nothing. Looks pretty good. In fact, shoot, that was actually a decent position right there. So here's the London opening range. That was basically a break of the London opening range low that we sat in. Since the open of London, we've been holding that low, which was that key support structure that we talked about. There's a downside break. I hate getting its scalps right ahead of the U.S. opening bell, which is basically 15 minutes away. So watch this. But long story short, bearish sub 32.83, looking for that run to 31.50 near term. Any questions on dollar CAD before we move off? So dollar CAD, obviously everyone's been watching the oil trade. A real quick segue into what that one's doing. Oil's coming to a very interesting area here. Here's what crude looks like. Remember 43.52? So we closed just below it yesterday, but now with much conviction. We'll be watching this right here. And in fact, if you take a quick median line formation off this, I bet you we'll see. That actually looks pretty decent. Resistance, 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 break, support, support, support. That should give us some resistance right around 44.40 today. On a topside break there, you'd look for recovery right back towards that 45.80 level. So all the commodities look super interesting right now. Oh, gold is another one that we presented yesterday on SB. This is really big for gold, really big. So the level that we came off of yesterday, what is it, 1163, is a basic 236 off the low. And again, we never really stress a 236 or 38.2 as a major region. But when they confluence with longer term slope support, basic trendline support, longer term moving averages, then it becomes a lot more technically significant. I also noted this on MB4X, just the change in behavior. So, this is the first time that we've seen gold pop through 60 on the upside, if we're going to dismiss this, since January. But more importantly, the slope that's been offering resistance, now just gave us support. That's a change in behavior, right? Every time we came into this type of slope, we saw the market turn over pretty heavily. Now we're seeing the market turn to the upside from that same slope. Okay, so we are looking higher above 1163. Here's what the intraday chart looks like, and this is what I put on SB last night. Okay, and we're coming into the first initial primary target here at 1175. 1178 is the bigger region. Okay, it's that swing high that you made here on the 23rd. It's the 618 retracement of the decline, and certainly might offer some near-term resistance. It's right beneath last week's high. Okay, a topside break there, you're looking for 1189, and higher up at essentially 1200. 1198 is the major, bigger region we're looking for. But this was a really clean trade. Why? And again, this is one thing that we noted in yesterday's radar chart. Here it is. It just so happened that the weekly opening range coincided dead on with the upper median line parallel. So it's a simple trade idea, guys. If you get a topside break above the weekly opening range, above upper median line parallel resistance, look for a rally towards 1175, 1178, and this is going to be the breach that's going to be a little bit more of a bigger deal here for gold near term. Momentum signature looks really constructive. You started the week, even to the close of last week, above 40, above 40, above 40. First 60 break keeps the upside in focus. Could get a little bit of a pullback off this region, but you'd be looking to stay constructive while above that upper median line, former upper median line parallel. Any questions on gold? I know this looks like a messy chart, but it's just two embedded pitchforks, guys. So you have the wider pitchfork here, which is what you're looking at on the daily chart. And then you have an embedded pitchfork just off the lows from September. And that's giving you a little bit more off that little bit more of a steeper slope, which has been guiding price action. So that comes in, like I said, around 1189 on the upside if we do breach. Remember, higher rates, typically, historically speaking, is bearish for gold. Gold does not pay a dividend. If you're holding gold and there's higher rates in fiat currencies, or if there's a higher rate on the dollar, there's more likely for market participants to flock into a yield or a yielding asset rather. So gold is a very interesting trade here, and especially if interest rate expectations get kicked out pretty far, they're more dovish, yada yada. Look for a break above 1180. Okay, we got 10 minutes left, but I do want to go over sterling yen, Aussie yen real quick. We'll take a quick look at the DAX. Bernard, I think you're in the room. I think the DAX and the S&P are also coming in some interesting areas here. But real quick, sterling yen, whoops. Here's what sterling yen looked like yesterday. You didn't get any plays on it, but I just do want to highlight the setup because it's still a primary focus for me, specifically, like I said, with all the sterling or the yen rather event risk that's on tap. This might be a decent pair to play. So you're sitting at support right now. The support structure that we're looking at is essentially the former high day close for the month. That's basically the October 9th close, which came in at 183.91. We're checking that as support right now. Here's what it looks like on the 30-minute. There it is. And median line structure off the high looks like it's guiding price action very, very nicely. Okay, and there's that near-term support that we're looking at. The only thing I'm concerned about on the short side of the trade, guys, you still do have some support to look, or you still have some support to get through before this thing is verified turnover. And that's basically the 50% retracement is at 183.47. Just above that, you have a basic trendline support, which comes in at like 183.70. Now, this only has 2 tags on it, so I'm not going to really stress that, but certainly the downside slope of this formation is something I'm paying close attention to. So, lowering our bearish invalidation level. Well, actually, we'll leave it exactly where it was yesterday in the report, but bearish invalidation for the immediate bias is 184.83. Downside break, you're still looking for that trendline support, but more importantly, that 50% pivot, which is at 83.50. So this is the operative structure we're looking to trade within. Keep in mind, you're getting some wicked divergence here. So if we do see a topside pop, we'd be looking for short triggers near this region. All right, so that's sterling yen. The other one is a very similar setup as well. Is going to be Aussie yen. And this one, here's what it looks like on the daily, has made a break of the key support. That was basically defined by 86.14. Here was what it looked like yesterday in Aussie yen. 86 into 86.14 was the major key support that we talked about on Monday's radar chart. So here's what it was. I guess this is Tuesday night. Very clean opening range for the week. Oh, we need this chart. We had a very clean opening range for the week, and the opening range was taking place just below that median line resistance. The opening range broke to the downside. We talked about that yesterday. Initial targets, here's where we were during the webinar. Initial targets where it was right here. Median line support and a confluence 618 extension off of the highs. Really beautiful level. The rebound didn't last long before some horrible CPI data out of Australia again slammed this thing right in to that former upper median line. Resistance, now support. So as long as we're in the confines of this, I'm still looking lower. The bullish, or the bearish rather, invalidation level is still going to be with the median line. Even if we poke through 86.13, I'd still like to favor the downside while below this slope. Near-term targets beyond here, 85.47, 85.22, and the lower median line parallel. All the levels are the same, haven't been changed from yesterday's report. Any questions on Aussie yen or sterling yen? We'll go over the yen crosses again tomorrow, guys, ahead of the jobless rate CPI / BOJ read for the rest of the week. Went over crude. We'll take a look real quick at some commodities, but I do want to get your questions if you have any pairs. For euro yen, yes, let's take a look at euro yen here for Mark. Here's what euro yen looks like. Or let's just take a look at euro first, Mark, and then we'll jump into euro yen. So euro dollar broke below the major support that we talked about last week. I think we covered this in yesterday's webinar, but essentially this is nothing for me to do here. You know what I mean? You're in the middle of a massive range. If you look at take a moment and look at a euro dollar weekly chart, guys. Here's what it looks like on the broader scheme. So this is still a huge consolidation pattern. We've tried to break the top side so many times, and it's failed 3 times essentially to close above. Each time we've tried to probe through, we've gotten some pretty wicked pullbacks. The risk, if you close above 114.34, is still for a rally here. But at this point on this drop, you're risking a move into the low week close, and that comes in at 108.13. Momentum holding 50 as resistance like a rock. That's bearish. Momentum trigger off the lows from March or April. That's bearish. Confluence resistance now. That's a 52-week moving average, which held exactly with that 114 level on the reversal, holding a major resistance. So who was it in the room that said he's a little concerned that we might see a little bit more of a pullback in the euro? I agree with you, right? But I don't think it's going to be necessarily a straight shot from here. Watch for resistance at those September lows, 50% retracement. That's 110.87. I don't have support till down right here at 109.45. So I don't really have much of a trade. Look for resistance here. If you bring this into a 30-minute chart, the only thing that looks decent is the weekly opening range, but even that is sketched out for me. I mean, I really don't have a position here for you. So yeah, Chris, it was Chris saying it was me. So he says that's why I was looking for the dollar yen longs. Yeah, I mean, again, I don't want to necessarily equate things in such a static way like that, but I hear what you're saying. So for euro dollar, look, it's been a contracting range. We will get a definitive break at some point. I just don't like where it is here right now. If anything, I think the risk is for a little bit more of a pop higher, but I do think you sell that pop. All right. So Mark, before I move into euro yen, understand that from the euro standpoint, that's kind of where I am. The momentum signature looks constructive. Here's 40, 60, 40, 60 all week long, first 60 break, but price hasn't really given us, the conviction break of the weekly opening range we'd be looking for. So put a gun to my head right now, I'd probably tell you euro will rally, but I would be looking to sell that rally. Here's what euro yen looks like. So euro yen made a break of the monthly opening range low this week, back below the 200-day moving average. And I'm personally looking for a possible drop down into that, 131.80 level. Now with euro yen, I think you're looking at a little bit better of a picture. I'd like to maintain a downside bias sub 134.50, looking for a drop into 131.80. 133.95 is going to be the monthly open. 134.50 is going to be basically 45 rather. It's moved a little bit, the 200-day moving average. 131.80 is a key 618 retracement. This is of the rally off of the yearly low. More importantly, it's going to be that lower median line parallel. So in a broader structure, that's sort of what I'm looking at with the euro yen. Intraday, let's see if there's anything juicy to work with here. Okay, this extension has been broken to the downside as far as a reference point, so that's null and void. We'll get rid of that. Let's see if there's any meaningful ratios off the high. And that's the US opening bell right behind me you might be hearing right now. Okay, so it looks like we completed a 1618 extension off the high. It's 132.88. The low is 132.70. We'll give that allowance. And one other thing, I just want to see what a retracement of that same range looks like. Mark says, interesting, your point of view. Yeah, smaller time frames, it's a mess with the forks and or trend lines. How about the RSI divergence, Lori's asking. So the RSI divergence is there. You're seeing price action make a lower low. It's very slight, but the easiest way to identify that is just to bring it into a line chart. That's a very slight divergence, very slight divergence. Remember, what's more important is that you're seeing an extreme in price not reflected here. Um, if this was still making lower lows and this was flat, that would be divergence. But this moving higher with higher lows and equal lows here is not going to be quite a strong divergence for me, Lori. So yeah, I don't really have a strong opinion for this on this for you, Mark. I wish I did, man. We'll have to keep this in view, but it looks like it broke the opening range low yesterday, but here we are popping back through. So I don't really know how to interpret that, especially on the fact that we're kind of just meandering near those lows for September. I'd be just watching the daily chart, honestly, either for a rally towards the monthly open, i.e. 200-day moving average for possible shorts again, but I'm essentially looking for a drop into 131.80 at some point. Someone else wanted something here. Mark Lavender, great to see you. Says, hi, Mike. Euro Oz 2, if you have time, please. I haven't looked at it. Let's take a look. Euro Oz, Euro Oz. Ooh, what a clean setup. Wow, you're coming into confluence resistance really close. Look at the median line off the highs there from September. Looks like you broke the median line to the downside. You came right into median line support. Nice rebound right off that region. This was huge for a Euro Oz. It completes a 100% extension from the decline off the highs. It completes a 38.2 from the ascent off the lows in a nice region of which you would expect to see some support. See what the intraday chart looks like. Yeah, you're coming some resistance right here. So you have the lows that you made from that swing back in early September, was it? Late August. Sorry guys, losing my voice. Former lower median line parallel, now resistance. And just for argument's sake, if we tack on a quick retracement off the highs, bear with me just one sec, guys. This is going to get messy. I just want to see this real quick. Yeah, that's what I thought. It's the exact 618. So let's work with this for now. From a scalping perspective or from an intraday perspective, actually we'll keep the 0. That's what I'd be looking at. So the 618 retracement, just from the decline off of last week's high, takes into 55.50. We just ran into that. Remember, again, the swing lows 55.57. So I'd be looking for near term. Oh, we actually highlighted this, I guess, earlier in the week. What was that, on Monday? So here is that confluence resistance now into that trend line. I'd open it up into like this region of resistance here near term. So look for a pullback. I'd look to stay constructive above 54 if we can, which is the swing lows from earlier in the month. But inevitably, you'd be looking for a stretch into the upper median line parallel here for Euro Aus. So on a weaker Aus, I'm assuming is what you'd really need to see here. Euro is pretty limited. You have some PPI figures, I think, later in the week, but look for resistance here at 155. Mark, hope that helps, man. Momentum signature looks pretty constructive after that spike low that we made into the lows last week. And this would be an example, Lori, of some momentum divergence that is actually a little bit more actionable in my humble opinion. I mean, you're seeing price action here drop into clearly lower lows, lower low, lower low, and the oscillator is making a higher low, higher low, higher low. So this would be a little bit more of a conviction momentum break than the previous pair we were looking at. All right. Lori says, thanks, I see that. Right on. So we got through everything I wanted to look through. I'm just going to quickly breeze through these guys. If you want to take some snapshots for your own references on the SPX, we're coming some resistance to the 786 retracement of the 2015 trading range. We're sitting tight at support of the 200-day moving average. That's something you'll want to watch. Momentum right at 60. DAX, very similar setup. Here's the German 30. That's now paired 50% of the decline of the 2015 trading range. 200-day moving average there comes out higher at 11,008. Near-term support 10,474 in the swing highs from last month. So just some key levels there on some of the major indices that we'll be heading into the interest rate decision. Best of luck trading today. Don't forget, Jamie's on tap later today at 2 p.m. At 1 p.m. rather, for the SB midweek strategy webinar. We'll be going over the swing trades that we're currently in and pending trades that we'll be looking to take as we wrap up the week and October trades. Best of luck trading today, and I will see you guys bright and early tomorrow morning for an update into the close of the month. Cheers.